Hi guys, Joe Neighbour from Signal Centre. It's Tuesday, the 10th of December, and I'm going to run through some indices with you all today. It was a bit tied up yesterday, so I couldn't do it on the Monday as you usually do. So I'm going to run through it right now for you all and give you my opinion on what to expect, or certainly what I'm looking at when it comes to stock indices at the moment. I'm going to start off with the FTSE 100 as I usually do. This is the weekly chart. For a while now, I've been saying while we're below this 61.8% level, there is scope for further downside, and we've had a move back towards the lower end of this channel, as you can see on the weekly time frame. If we take a look at the daily chart, as I mentioned this morning on our morning video, I've been watching this head and shoulders top pattern, or potential head and shoulders top pattern, form over a number of weeks and months, actually going back to March 2019. I was a seller up here at this 61.8% level, and we have sold off quite convincingly from there and heading now towards the neckline of this head and shoulders top pattern, which comes in around about 7,003 according to my charts. So all looking a little bit bearish at the moment. Obviously, we've got a huge event in the UK this week, a massive political event in the form of a general election. It looks as though the polls are suggesting there'll be a Conservative win and a majority at that as well. I'm not overly convinced. I think there is room for some surprises and some shocks as a result of that. If we look at it from a perspective of the Tories winning a majority, then I think that will be bullish for the pound sterling, which actually could have a negative effect on the FTSE 100, because it would mean it would act as a drag for some of the larger constituents within the index to actually earn a higher percentage of their revenues in US dollars. So pharmaceutical stocks, oil stocks, and a number of others, to a couple of big banks as well, HSBC and Standard Chartered. So something to be mindful of. If there's a hung parliament, or if there is a Labour win, which feels a little bit unrealistic, but you never know, then that could be, or the expectation is that it's going to be really bad for sterling, and as a result you'll see the FTSE potentially shoot up as a result, because obviously those big companies, the oils, farmers, banks, they're all going to push higher as a result of a weaker pound dollar. And the FTSE 100 could in fact rise off the back of that. So up until the end of this week on Thursday, Friday, I'm expecting some choppy price action, already down 1.25% from the overnight close on the FTSE 100. Just going to drill down into the 4-hour chart quickly as well on this. Again, you can see this range here that the FTSE's been trading within, and this goes back to the 1st of August. We failed at the 61.8% level for the second time, and we're heading lower. On a shorter time frame, we had this 38.2% Fibonacci level at 72.50 acts as resistance, with a nice turnaround shooting star candle there, and then obviously this big impulsive move to the downside, which we're in the midst of at the moment. Below 71.29, this support here that we made on the 5th of December, then I think we're going to be heading back down towards the lower end of this range, which comes in around about 7,000. So keep an eye on that over the coming days. Moving on to the DAX. This is the weekly chart. This is the channel that we've been discussing for the last couple of weeks, suggesting that there could be some stalling around the upper end of this channel, which there has been, and we are heading lower now. Again, 1.25% down on the DAX, in line with the FTSE 100 today. We've had some ZEW data, which appears not to have come in particularly healthy, and that's sending prices lower today. Taking a look at the daily chart, you could argue that we formed a small top there, breaking below support there at 12,988. In terms of short-term targets, I've got a couple of Fibonacci tables on here. So we've gone from the low here on the 15th to the high on the 19th of November, and we've got 38.2% coming in at 12,785, which roughly lines up with this uptrend line. Below that, we're looking down at the 50% level of this low here, 3rd of October, to the high again on the 19th of November. We've got a couple of Fibonacci levels, so a confluence of levels that line up there, so we could see some buying interest there on a short-term basis, but I think a corrective move lower looks likely in the short term. If we take a look at the 4-hour chart, we had this expanding wedge pattern, and we failed to move higher, and we're now breaking the lower the low from the 3rd of December. So we could continue to head lower there, and it could be an opportunity to sell bounces on the DAX in the very short term. Now, moving on to the US markets, obviously they've been a picture of strength for a number of months. Let's just start off with the NASDAQ and the weekly chart. Clearly bullish, although some stalling around the all-time highs here. In terms of where the major support is, I'd be looking for a pullback down to around about 8,035 and still believe that's quite bullish, and we'll be looking to buy dips towards that level. It doesn't mean that there's not room for a sell-off and some good trades or good risk reward on the downside in the short term. Let's have a look at the daily chart. Not really much on offer there, just a bit of sideways chop, a reaction low there at 81.62. That would be the potential target on any short-term corrective move. If we start to break down through there, then obviously there's scope for a move lower. This is a trade I actually have on at the minute. It's a short-term trade on the 4-hour charts, and I was looking at the potential of a head and shoulders top forming, and the reason for that, we had this throwback in recent days towards a 78.6% retracement level at 83.89. We saw some stalling, we saw a shooting star candle having sort of tried to push above it, so that for me was a cue to get short, so I sold it around there, and I'm looking for a pullback towards the neckline of this head and shoulders pattern, which is at 81.62. It's only a potential head and shoulders at this stage until it completes or breaks the neckline. Then it isn't a head and shoulders, it's only a potential one at this stage. But I've been looking for a short-term move down to 81.63, which is to test that prior low that we saw on the 3rd of December. If we start to give way there, then I think we could head down to 78.75. Which is also a 61.8% retracement of this move, swing move here from the 3rd of October to the highs on the 2nd of December. It's a very similar picture elsewhere on the US indices. S&P stalled at all-time highs, essentially pulling back to retest this low that we saw on the week beginning the 2nd of December last week. So we could see it head back down towards there. That's where the uptrend line comes in. And also some horizontal support at 27,374. Sorry, this is the Dow Jones, not the S&P. And then we have the daily chart. Break of that short-term uptrend has obviously signalled a move lower. We've had a potential go at retesting that and failed, and look like we're heading lower again on that. If we take a look at the 4-hour chart, I think that's where you can possibly find some opportunities. We've seen a break of this bullish channel. We've seen a really nice retest there of the underside of the channel. If we take a look at the Fibonacci levels on that as well, yep, comes in around about 78.6, so very similar to what we saw on NASDAQ, and we've sold off from there. So short-term targets would be a retest of the lows that we saw last week on the 3rd of December at 27,325. Below that, could be looking for a 50% retracement of this swing move from the 3rd of October down to 26,970, and then an extension of that look for the other fib levels at 61.8 and 78.6 to target on the downside. On the S&P 500, again, weekly chart, you can see we're trading up at all-time highs. We had a big turnaround last week from a bit of a sell-off. Selling off again today. Any downside, I think, will be limited on a longer-term time frame down to around about 30.25, which is this horizontal support and the uptrend line. On the daily chart, you can see the choppy price action that we saw last week, followed by subsequent recovery and then a move lower again, which has started this week. On the intraday charts, we've got this break of this wedge or channel. Again, a retest of the underside of that and a sell-off. So, yeah, further downside potential there. Possible head and shoulders forming as well if we can break below that low that we saw on the 3rd of December. And then we'll be targeting the fib levels, 38.2, 50% and 61.8% on the downside in the short term. So that rounds up the indices for this week. Expecting choppy price action and some difficult conditions, but I think the opportunities are on the downside as we go towards the general election in the UK, and also some information that we're expecting over the weekend on the trade deal between the US and China. Good luck, and I'll catch up with you next week. Cheers, bye-bye.